that Piramal Enterprises has signed a MOU with Canadian pension fund, a blue chip kind of a fund, for setting up a asset aggregation platform. And probably this is of course for renewables, but this surely excited the stock in trade today. And we have none other than Mr. Ajay Piramal himself to talk more about how exactly our deals being clinched. Mr. Piramal, thank you very much for your time. Congratulations, another big one with one of the marqueest asset allocators globally. Tell us what exactly is the structure of this transaction. It is a platform for renewables. What would your interest be, and how Piramal and Canada Pension Fund have come together on this one?
So with Canadian Pension Fund and Piramal, we are now co-sponsoring a renewable energy focused InvIT. This is a $600 million asset aggregation platform where CPPIB will put $360 million and Piramal Enterprises would put $90 million. So our relationship with CPPIB began in 2013 when we had a platform which we were doing lending to the real estate, wholesale lending. Since then, I think the platform that we are now setting up for renewable energy is a good vindication of what we have been doing over time. See, the Canadian Pension Group has seen the way we have the quality of team, the way we do underwriting and the governance standards that we have, and hence would like to co-sponsor with us this space.
Ramal, this is the first ever InvIT focusing on renewables. Tell us what kind of profile of returns does this business have? In the past couple of decades, we have seen, attempts being made, but business models are not very successful historically. Do you think the environment now has turned much more conducive for improved returns from the business of renewables in India?
So as far as renewables are concerned, going forward, I think that the InvITs is the way that we will be able to attract capital for renewables. Because as you have said, and we noticed that the IPO market for renewables does not exist today. That's because the expectations of people from the IPO market, the returns are much more than what a renewable story plays out. And thus, this is the time where InvITs, where there is a return anywhere between 10 to 12, 13%, and these investors are happy with that. This is the type of vehicle that I see more and more happening. So there is going to be consolidation in the space of renewables, and InvITs would be the way forward.
Both Canadian Pension Fund and Piramal Enterprises will be the co-sponsors, and you aim to raise 25% from other investors. Tell us what kind of or category of investors you would be reaching out to, and what kind of money would you attract for the remaining part?
We need to raise about, in our first, we've said we'll close it at 600 million, so we will raise 150 million more. And again, these will be investors who look at steady long-term returns. So like pension funds, other places where you have long-term money that is there and they want steady returns without too much of risk, that's the sort of investors that we will attract. Because remember, the assets in the InvIT will be all cash-generating assets.
Right, Mr. Piramal, this is of course a great deal for the company, but just a question on the existing business. How is the NBFC part of the business panning out? Reports of now coming in that you've done another MOU with a large realtor. How are things at that end? Because the street is a bit concerned about overall NBFC business and real estate and construction in particular. What's your observation there?
So our view has been that our NBFC business has been steadily doing well. If you see the performance even of the last year that we just gave up, we announced, it has been a steady increase of 24% on the top and bottom lines. And we are confident that going forward, the number of NBFCs actually that will be able to provide high quality credit is coming down. And Piramal is one of those which will be able to provide this credit. So I think we are very confident about our underwriting. The MOU that you're talking about is not done by Piramal Enterprises. That is by another group company of ours, which is not related to Piramal Enterprises. So therefore, let's not confuse the two.
Sure. So, but overall, do you still see easing of, or I would say, is there any easing of borrowing costs now, or have they stabilized? Because last time we interacted with you, they had an upward bias. And also on the growth front, how's the disbursements happening?
So the interest rates have stabilized, though at a higher level than what was before. But the point is that the net interest margin is also going up, because not only have the costs gone up, but even now the money that we lend at, those rates have also gone up. So the net interest margin has actually gone up, and I see that in the year, this current year, we'll see higher NIMs compared to the last quarter.
Right, right. So last question before we let you go. So one of your big, partners and clients, Lodha Developers, again, there are some negative reports coming in by rating agencies reviewing their, call on the papers once again downwards. Would you like to assure the street and your shareholders how are things, the relationship between Lodha and you right now?
So we have been constantly monitoring the Lodha relationship, as you can understand that. And we have said so, we've said so publicly, that as far as we see that the repayments that we are getting are on time, and in the proof of the pudding is in the eating. And in this quarter, we will see that more than 1,000 crores of loans that we have given to Lodha will come down. So by the end of June, you will see that this is coming down. So it can only happen if the quality of asset that we have lent to is good enough to generate that.
Mr. Piramal, we'll let you go on that one. Thank you so much for that clarification. I'm sure the shareholders will be very happy to hear that. 1,000 crore clearly coming back in the near term from Lodha in particular, but otherwise too, the relationship which you have with Canadian Pension Fund is only becoming deeper.